All right, this meeting is now being recorded. This is the January 16th, 2024 meeting of the Connecticut Green Bank's ACG Governance Committee. In the absence of Tom Flynn, who is traveling today and is on a plane, he has asked me to go through the slides, so I'll do the call to order for the meeting. This is Brian Farnan, General Counsel and Chief Legal Officer of the Green Bank. And I would ask for any public comments. All right, with no public comments, we're going to move on to agenda item number 3, which is the approval of the meeting minutes from our October 10th, 2023 meeting. Hopefully people had a chance to review those, and I would ask for a motion to approve, or if there's any questions or comments.
I'll move approval of the minutes, Brian.
I'll second.
Those in favor of approving the minutes from the October 10th meeting?
Aye.
Aye.
Thank you so much. And then the next agenda item is our loan forgiveness approval for our op demo projects. Matt, I think you might be the only board member we still have left that remembers our old operation demonstration projects. And Bert, do you want to be the one to go through this, or do you want me to?
No, I'm happy to go through this.
Excellent.
Yeah, sure. Let me come on camera. Sorry, I've got two screens here, so it looks like I'm not paying attention, but I'm distracted, but I'm actually looking right at everything here. So yeah, so this actually goes back to, this issue goes back to the prior name of the Green Bank, the Clean Energy Finance and Investment Authority. When we were called that, there was an operation demonstration program. Actually, I think, Brian Farnan, it actually predates CEFIA. I think it goes back to the Connecticut Clean Energy Fund.
It does, yeah.
This goes to we had when we transitioned from the old clean energy organization that we were that was within CI to the Green Bank and CEFIA. This is when we started to have this larger conversation of whether or not we would want to finance these pre-commercial technologies. And this was really the last holdover of what, as we made that transition to only financing commercialized technologies. And I think in hindsight, it was the right call. If you look at, our successes through the years, it was something I think we did that was a smart decision.
Right. So when the CCEF did these operation demonstration program loans, they were effectively forgivable loans in the event that an establishment did not reach commercial success. And yeah, the reason, you can see the reason for that is that the CCEF wanted to promote the exploration of these new pre-commercial technologies. So that was something that was considered, within the framework of the CCEF at the time. But in the event that some of these enterprises did become successful, or a commercial success, or they had a liquidity event, meaning they were acquired or otherwise recapitalized to the extent that it would be appropriate for the CCEF to recover its investment, its loan investment, then the CCEF would get those funds back. There was a time frame set on that of, I believe it was 10 years.
Yep, 10 years.
And so there were probably between half a dozen and a dozen of these that were kind of floating out there when the Clean Energy Finance and Investment Authority, now named the Green Bank, took over and brought all those legacy programs over with it. So and also what happened, as well as with these loans is that since the Green Bank was moving on in its new operation, we looked to Connecticut Innovations to kind of manage these, oversee these transactions. Not really management. There wasn't terribly a lot to manage, but just to oversee them. And they did until that arrangement ended a few years ago. Brian, I can't remember when that ended, but it was, I don't know, between 3 and 5 years ago when that arrangement ended. So these transactions, by and large, have been just sitting there, waiting for the time to go by. And we've had a few that have clicked past their anniversary date and need to be just cleaned up, from a documentation point of view, to determine whether they in fact have achieved commercial success or not. If you'll not on the screen, but in the memorandum, it shows a complete list of transactions that have previously been wiped off the books, and these last 2 transactions remain. And contrary to what was included in the memo, these transactions have already been written down to $1. I don't know if Jane is on and she can confirm that. Someone actually put in.
It is, and I think it is I think it is in the memo for $1.
Yep. We are carrying.
Yeah, someone inserted an M after 1, and I assure you, it's 1. That was an errant insertion. I'm not sure who did that at the last moment, but it passed my notice. But I assure you, it's $1. Thanks, Jane. You can confirm, right, for each?
Yes, each one's $1.
Okay, so we're talking about striking off $2, not 2 million. So let's understand that. So is everybody with me so far? Any questions thus far?
Nope.
Okay.
No.
Oh, go ahead, Matt. Okay. So the last 2 here, one is I'll take them in reverse order. Actually, Anchor Science down there at the bottom, they're $150,000 outstanding. Actually, it was interesting. It took us quite a while to kind of chase this one down, but we ultimately did determine reaching out that there was no commercial success. The company is wound up, defunct. So that did it for that entity. The other one, New England Hydropower Company LLC, we actually this is the company that has done the Archimedes screw down in Meriden, which is still an ongoing active transaction, and it will be for the next 30 years, God willing, and providing energy through virtual net metering to Meriden. So, but that business is actually the Meriden screw, or the Archimedes screw there. It's actually separate, related but separate from this loan. So evaluating this loan, OpDemo loan, on its own merits to the financial performance of New England Hydropower, they continue as an enterprise, but they have not actually achieved commercial success as defined in the OpDemo agreement. However, when recognizing that we were going to get to that window, and that we were actually assisting New England Hydropower with the Archimedes screw, et cetera, the Green Bank insisted on a revenue sharing arrangement to provide compensation to the Green Bank equal to 5% of the company's operating revenues from 2016 to 2036. Those terms are defined So, so we have actually not realized upon that 5% yet, but it remains a almost like a lottery ticket. I'll just call it like that. That yeah, should these Archimedes screws proliferate, we just didn't want to be in a position where the green bank, someone could say, well, green bank, you wrote off $500,000 of an op demo loan. You should have realized some upside there. So this is our attempt at realizing some upside, and we have the next 12 years to go to be able to have a chance at recognizing some upside. Will that happen? Who knows? But at least it will capture it should that occur. But that is separate from the op demo loan, which has actually is now crystallized, meaning that the commercial success and liquidity events were not achieved in 10 years. So we just need to move forward in accordance with the agreements and basically forgive that loan. So for New England Hydropower. So that's where we are. It's as straightforward as that, and happy to take any questions before we move on to the resolution, which is straightforward. If you go back one slide, happy to take any questions on this if there are any.
Hey, Bert, I have one. Are there any other terms of those op demo agreements that we might still want? Like, for example, I think we like with the Archimedes screw, I think they have to, when they publish things, they should acknowledge the investment. And I don't remember if we had signage down there. Are there any of those sort of non-monetary terms that we want or can keep?
Well, those are carried. The things like that, and we do have signage. Those things like that are carried in the transactional documents for the Archimedes screw in Meriden. And should we do any other transactions with New England Hydropower, we would, make sure that that's covered in the transactional documents.
So we're just forgiving the amount. We're not releasing them from any of the other stuff.
Well, I have to defer to Brian, but I think that pretty much everything else in that there might be, I don't know if there are any carryover obligations. Quite frankly, they're immaterial.
After the 10-year period, no.
Yeah.
Well, and then, the 20-year period when we deal with New England Hydro, but with the other ones, no. But I mean, any signage would have likely occurred in the first 10 years. And we would have that, for example, in any kind of mention of ours.
Yeah, okay. but as far as New England Hydropower, we have an ongoing relationship with them. So we're, they're managing the Archimedes screw, from an operational perspective, and that does well. We get budgets. We have meetings with the management pretty much on a monthly basis. So it's an ongoing activity. We're getting financial statements, operating reports, all of that good stuff. So so that stands apart from this the op demo loan. So those obligations are ongoing.
All right. I will just say, Brian, I know you've been looking. I saw an article in the paper about one of these projects Fuel Cell Energy and Exxon is working on, and I'm sure it was one of our projects, but I know you're having trouble finding it, Brian. I'll look, but I also think we cashed out of that project. But good program. There was one board member who thought we should continue it, but I guess in hindsight, he might have been wrong.
Well, at the end of the day, part of that is we still have Connecticut Innovations, we can always kind of work with them and provide them the clean energy background to get them comfortable. So it's still there's still an avenue to support.
Yep, no, I agree. I don't have any other questions. Thanks.
Okay, I think we're ready for the resolution.
Can I have a motion to approve it?
Last question. I assume this is in compliance with our write-off procedure?
Yeah, I was just going to mention that. So just so everyone understands why this is coming to the ACG committee. We made a decision collaboratively through the ACG committee, working through the deployment committee, that when we restructure a loan, when there that would go through the deployment committee. But if there's an actual write-off, a write-down of an investment, those do come through the ACG committee for approval, or over a certain dollar amount for a recommendation to the board. Because of the dollar amounts here, well, we can have this approved at the ACG committee level.
Okay. If there aren't any other questions, I'll make a motion to approve.
I'll second.
Those in favor?
Aye.
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 Thank you. Motion approved. We will move on to our legislative and regulatory policy update. I'm going to turn it over to James and just mention at the beginning of this that this is a new process. We're really excited to implement this as we have continuing improvement. And the plan is to keep this committee apprised of legislative items, energy topics in advance of the legislative session. And then we have a process in place to seek out going to the chair, the vice chair during session in real time as issues arise. So with that, James, I will turn it over to you.
All right. Good morning, everyone. James Santos, Legislative Liaison. The 2024 legislative session is set to start on February 7th of this year. So what I'm going to outline for you right now is all legislation that is preliminary. It's currently being negotiated and could, very well change in the next 3 weeks, as you all know. The ACG meeting for next year, it's going to be a long session. So that session starts in January. So at that one, it'll be a lot longer, a lot more detail. But right now, this is the best we have to work with. So I just want to kind of outline a few items for you. And Brian Farnan, please weigh in if you'd like to, and then we'll answer any questions you may have. So the first is the Uniform Tax Code property tax issue. Sections 1 and 2 of House Bill 6764 in the last legislative session would have addressed the issue. What it does is it modernizes the tax code from the transition from the ZREC to the NRES program. Currently, tax assessors in some municipalities are interpreting the buy-all, sell-all as not for commercial purposes on site, that they're selling it to the grid, so they're taxing them as front of the meter. It is causing some projects to go into the red, and it is stalling deployment of solar. So this is definitely an issue that we're working with right now. That's section 1. Section 2 created a uniform tax. We were not engaged in that last year. What that does is it sets any solar project over 2 megawatts. It sets it to $8,000 per megawatt per year in an attempt to level the playing field. So right now, a lot of the siting of solar occurs in Eastern Connecticut or in towns where the mill rate is very low, but you're never going to see something in Waterbury with a mill rate of 60, right? It's just not going to happen. The second is the resiliency and TIF financing. Currently, the Green Bank is working with OPM and the governor's office and other executive branch agencies, the Department of Insurance, on resiliency measures. One of the major issues we're working on is to enable municipalities the option to utilize TIF financing for resiliency improvements through a special tax district within the municipality. Now, typically, TIF financing utilizes incremental taxes from a project to repay the bonds that are issued for those measures. The reason why the Department of Insurance is involved is we're hoping that savings that will be generated off their premiums by incorporating these resiliency measures will allow them to repay the bonds utilizing that. Plus, it also opens it up to whatever state or federal funding you have to pay back the bonds. So that's currently being negotiated now. Interested to see what shakes out in the next couple of weeks. The NRES expansion, the industry and chairs of energy and technology, and Representative Steinberg had in a piece of legislation last year, increasing the scope of the program from 100 to 200 megawatts. It was pulled out before the public hearing portion, but it was said that it will be coming back this year, and we have heard it will be. So that will be an issue on everyone's radar. The hydropower task force, Mariana from the Green Bank was actually appointed by the Majority Leader Rojas in the House to serve on that task force. They're meeting weekly. Recommendations are due by February 1st, so we're going to be involved in that as well.
And I just want to add here, I think Mariana's doing an amazing job. She really is value added with on the ground finance experience in hydro, which I don't think the task force would have had without her being part of it.
Agreed. Yeah, she's been phenomenal, and she's the first one that came out with the recommendations for discussion on the task force, and everyone's kind of following suit now. So she's been fantastic. The residential solar consumer protection is basically a solar bill of rights bill. We know Department of Consumer Protection is looking to introduce legislation in this upcoming session to put safeguards in place for residential solar customers. Sometimes it's as simple as just denoting what the warranty is and what's the process for reaching out to the company and getting that warranty to be utilized. A lot of these companies are fly by night. So we want to make sure that there's some sort of long-term contract in place and clarity. The other is EV regulations. Probably saw in the press, I think this was in October or November of last year, sorry. There were regulations in the regs review committee to the California Advanced Clean Cars 2 and the medium heavy duty emission standards. Due to a lack of votes, Governor Lamont pulled those regs at the last minute. There were several press conferences that followed, where basically every leadership position in the two caucuses came out and said there's going to be something happening this coming session. So that is going to be on the radar. I have not seen any language for that yet. I don't think anybody has developed any yet, so we'll keep you abreast of that issue. The last one is the heat loan. So currently, DEEP introduced a proposal to expand the heat loan and focus on the installation of heat pumps. We're working with OPM, DEEP, and other stakeholders to not extend the 0% interest rate on bill utility administered heat loan to a model that's more of a collaboration with the EDCs, local banks, credit unions as a pay as you save model, which would reduce the ratepayer costs while achieving a lot greater impact. So that's very high level of what we know now. I'm sure if we had this meeting another week, there'd be another 5 or 6 things on there, and the week after that. But Brian, if there's anything you'd like to add, or if there's any questions anyone has.
No, this was perfect. And one thing I would just point out, it's when you look through this list, this is not a list of items that were, hey, we're sponsoring a bill this session. This was more of like, these are the 7 things that we think impact the industry and the Green Bank, and want to just kind of bring them up to all of you on this call.
Yep, and it is. I mean, with the caveat, this is what we know is out there, right? So it's gonna be very interesting to see what's introduced that we don't know about yet.
Hey, James, I had a couple of quick comments, or if you want, you can call me offline. But the 2 big ones are on number 1. If you could let me know the bill number when it comes out. I mean, this has been a sort of known problem now since NRES was written, and it's crazy. So I think we want to make sure they get it right, because probably some contracts have already been signed that are upside down. And 2, it might be worth it, Brian, you know more about this than me, that try and clean up the residential one too. I have to say, I haven't looked at it.
We did on the residential side. So
Okay.
and we're almost, and that actually got passed last sessions. So we think we're in a good position there. And we actually want to copy some of that language and potentially use that as it relates to the property tax issue on the C&I side. For example, instead of saying a commercial and industrial tax exemption, it's better to say just non-residential. So you have 2 clear buckets, because you can run into these issues where you've got a nonprofit or a hospital, and then a tax collector, a tax assessor, like, well, that's not commercial, so I have to technically tax it. So there's anyway, there's this ambiguity. I feel like it opens the door to potentially.
Anywhere they can tax it, they will, and that's their job. So I agree. I just thought that we had the issue of whether we're generating more than the needs on site on the residential side, but if that's cleaned up, that's fine. And then on the
Yep,
TIF.
and we have a solution for that too, because that's another component. Because traditionally, the policy's been, it's for this tax exemption is for your on-site use only. Under the NRES program, the new NRES program, they're encouraging you to go a little bit bigger than your own load, which is beneficial to the entire grid. And we don't want to see those systems penalized, in essence, having one set of public policy encouraging something while another set of public policy is discouraging it. So we're working to clarify that too.
Yeah, that's the part I was worried about. And then on the resiliency TIF financing, I know you mentioned tax districts, but I mean, I'm sure everyone's aware there's energy improvement districts, and maybe that might be a good vehicle. But one of the things that's always been a bugaboo about the flexibility of designing these districts is the prohibition against projecting power across public rights of ways, which the utilities have jealously guarded. So I don't know if that's ever going to change, but that's, just keep that in mind, that these districts would be a lot more useful if they had that right.
Matt, could you explain that a little bit more?
I don't know where it is. I apologize. I could find it again, but there's somewhere in the statutes, no private entities can't project power across public rights of ways, only utilities can, so a road basically. So if you had like a town campus, think of a town that had a town hall, a school, some other senior center, and they were in an area, but they had a road between them. You had wanted to sort of efficiently locate all your generation on one site and use it to power all the other sites. In the old days, you couldn't do that, or at least I think still that you can't transmit that power directly across the right of way.
That's
Yeah,
really
this
helpful.
is-
Thanks.
this is
Because as we look
Lonnie.
at resilience
is-
hubs, that'd be a critical piece there.
Yeah.
This is Lonnie. We just had to do, well, a couple of years ago with Bishop's Orchards, one of the big orchards on the shoreline. And so they wanted to have the solar panels in one of their orchards, one of the lesser used orchards, and project the power to help their, the physical entity of their business, which is huge. And we finally got them to put it under the road. It was bizarre. Like it couldn't go over the road, but somehow everybody agreed to let it. And once we put it under the road, it was fine. It was just weird.
Yeah.
I'm surprised they allowed you to do that, though. I mean, to Matt's point, I mean, that's always been a stumbling block. They just wouldn't allow it.
Well, this is how life is. There are these rules, and then suddenly it goes under the road. I mean, that's one of the things we really need to deal with going forward, because we're in this brave new world, and there's going to be examples like this popping up.
Yeah, I mean, the NRES helps a little because you can just get the credits, but even then you're taking a haircut on the credit. So anyway, I'm happy I haven't looked at it in a couple of years. I just remember from past projects. So I'm sure there are folks who know a lot about it. I just wanted to put it on your radar screen.
Yeah, we've dealt with it, especially when you deal with like a larger project, like a university project where someone, has more complicated, different buildings, facilities. It's definitely, we've encountered it.
Yeah, or these whatever they're called, the little districts we set up with the fuel cells for emergency services. The name's escaping me, but at any rate, just something to think about.
And any other questions? I can say there's no motion that we need on the legislative. It's more of just a report out to keep you all aware of what we expect to see this session.
Thanks.
Thank you.
Now we're going to move to our APA report out, and I can say that we were pleased. When you go through and Jane, God bless her, there's so much work goes into these auditor of public account reviews, and for them to have, obviously in a perfect world, you would have no findings, but the fact that we had two, what I would refer to as relatively small findings, is a very positive and good APA report. So we were very pleased with that. So with that, Jane, I'll turn it over to you.
Thanks, Brian. Just a little background on the timing of this audit. We actually signed the engagement letter on April 14th of 2022, and the report was issued on December 21st of 2023. So about a year and 8 months for them to review and finally report out on 2 years. And that's probably an average timing for these. They tend to take a long time. And when they did issue us the report for this one, they said that they expected, they had a different block of auditors who are going to be ready shortly to be looking at FY22 and FY23. So we'll probably hear from them within the next couple of months or two. As Brian said, this was it wasn't a painless audit, but the result is actually very good in our eyes. One of the big things to note here is that they did say that we appropriately addressed all of the prior audit recommendations and that those have been resolved. And in the two comments, the first one related to language for false statements that was missing in our contracts. We did have language in our contracts that said that false statements could constitute a default, but they had changed the regulations earlier to say that they would be a Class A misdemeanor. And beginning as of February 2023, our contracts all have that in them now. Next slide, please. The second comment had to do with tracking of surplus funds related to our bond issuances. And up until the FY 2021 period, we had not issued any bonds. So it was something that we had not been aware of needing to be tracked per our operating procedures. So what we have decided to do, well, what it says that we need to do is to track the funds coming in and the funds going out, and anything that is excess needs to be transferred to our operating account. For us, effectively, it did end up working this way. Both of the issuances we did during this period did not yield any surplus funds. If you look at the offering statements, the sources and uses funds of those were equal. So they said we didn't have a procedure in place to track and identify this. And what we did with the two bonds, going back and checking the official statement and looking at the sources and uses of funds, is something that we told them that we would do going forward for any potential bond issuances that we may be doing going forward. And that was basically it for the audit. So are there any questions? All right,
excellent. And we wanted to report out on this because I feel like we only report out when there's something bad going on. And this was positive. It's like, it's like, no, we should report out on the positive too. So thank you so much, Jane.
You're welcome.
And then I believe this is our last item, and this is our statutory report that I can thank our old ACG chair, Matt Rinelli. Someday we're going to call this the Rinelli document, and James is going to, or James, you can kind of quickly report out on what was filed. And I think, well, and I can even handle this real quickly. In a nutshell, you look at the REFA account and you look at RSIP. So those are the really only two things that were filed in 2023, and everything was filed on time, and they were actually filed early. So I have to thank James for that, really kind of owning the process and kind of improving it. And REFA is an old legacy account that is not something that is no longer with the Green Bank, but we still have a reporting requirement. So we're trying to get a technical fix to fix that. And then in 2023, it was with the end of the RCIP program, that was our last statutory report. So we won't be following that report any longer. And then maybe I'll turn it over to you, James, on the statutory reporting changes for 2024.
Yeah, so you already covered you covered the second and third one down there in red, the REFA and the RCIP. The only other outstanding one you didn't touch upon was the board diversity report that historically we have filed. We were notified by the Secretary of State's office that quasi agencies are not required to file that. We received an email from Jacqueline Cozen, who's the Deputy Secretary of State. So that was removed from our reporting requirements. So essentially next year, we're just, we're going to stay on track. Hopefully we're going to be able to get that REFA technical amendment. We have, shared that with the energy chairs already and asked them to raise it. We'll be discussing it in the next couple of weeks with them in person, but I don't think there's going to be much issue with that one. And then the RCEP is very straightforward. So that's all I have to add on that, Brian.
Thank you, James. And I would just add on the board diversity report, although not technically required to be filed, we have various initiatives within the Green Bank to encourage diversity, from hiring practices to our engagements with third-party providers for the Green Bank. So very proud of our track record in that regard too. I think with that would be, I would request a motion to adjourn, and believe it or not, maybe give everyone a few minutes back.
So moved.
I second.
Thank you, everyone.
Have a great day.
Thanks,
Joanna.
everybody.
Thanks, Lonnie.
Bye.
Thank you.
Bye, everyone.
Bye-bye.